So I think long-term Tesla is an incredible investment. On the short term, Tesla has these headwinds with higher rates, retooling the factory. So I think if your goal is 1 to 2 months, I don't know about Tesla, but I think if your goal is over the next 3 to 5 years, Tesla is as good of an investment as ever, and it's just a high-valued stock.
Thus, in my opinion, Tesla is a fantastic investment in the long run. These short-term challenges for Tesla include increased rates and plant retooling. Therefore, if your objective is within a month or two, I'm not sure about Tesla, but I think if your goal is over the next 3 to 5 years, Tesla is as good of an investment as ever, and it's just a high-valued company. Although statistics indicate that individual investors are picking themselves up and returning to the stock market this year, their enthusiasm for Wall Street is not uniform. According to Vanda Research, stocks exposed to a hot new technology, and Tesla Inc., whose shares had their worst-ever performance in 2022, have dominated the move. Even if retail investor inflows into U.S. stocks are at levels last seen in 2022-2021. For a variety of reasons. I'm not a huge supporter of unions. Although your salary may be lower in U.S. dollars if you work for Tesla, you will receive stock options. And those people performed exceptionally well when the company's performance increased by 1,500% in 4 or 5 years. It's pay-for performance. At Tesla, the issue is that Ford's stock has never increased in value, even if you were paid the same at Ford. Ford union members aren't saying, give us stock, give us cash, they say. And done. That's what separates an old industrial company that's nearing the end of its existence from a very exciting growing company. According to a note released early this year by Marco Lain, Senior Vice President, Giacomo Parentoni, Head of Data, and Lucas Mantel, Data Science Analyst. Demand for Tesla shares is at an all-time high, and to a lesser extent, so are stocks related to artificial intelligence like NVIDIA and AI, as well as the rest of the FANG group. Even the worst year for Tesla stock hasn't caused individual investors to lose faith in the electric car manufacturer and its multi-billionaire CEO, Elon Musk. These individual investors have persisted in buying shares. According to Vanda Research data, they were aggressive buyers every day in the final month of the previous year, pushing their net purchases to all-time highs in the fourth quarter and December. They seemed to be about to receive a token reward for their allegiance at the time. After a 7-day losing skid that had pushed Tesla shares down 70% that year and erased about $720 billion from the company's stock market capitalization, the shares ended the day 3.3% higher at $12.71. In New York, concerns that Musk's purchase of Twitter would distract his focus and boost his sales of Tesla stock to keep the social media business viable. Worry that demand would diminish in the event of a recession and increasing interest rates that hammered growth companies had all contributed to the beating. It was the third worst performer in the S&P 500 index that year. At one point, due to the decline, according to an internal email seen by Reuters, Musk urged staff members that they shouldn't be disturbed by stock market craziness. Despite Musk's obsession with Twitter and the risks to the demand for electric vehicles, Tesla's ardent supporters among retail investors have not been deterred from a stock that rose to one of Wall Street's highest flyers during the pandemic. According to Viraj Patel, senior strategist at Vanda, retail investors have purchased more Tesla shares in the previous 6 months than they did in the 60 months prior. When you have a buyer who is obviously not reading the fundamental signals, it's a seller's paradise for institutional investors, he continued. Retail investors in Tesla are still optimistic this year. In fact, as Tesla's stock continues one of its longest winning runs ever, ordinary investors are snatching it up. Based on data from Vanda Research, Tesla shares were the most popular purchase for retail traders in June. However, recent news about Tesla was not very good for ordinary investors. In contrast to the global EV giant's record-breaking figure, in the second quarter, Tesla's third-quarter deliveries fell short of Wall Street's expectations. Tesla announced a few days ago that it had manufactured 434,800 cars, delivered 435,000 SX cars, and produced 497,425 4 million cars. Ahead of the release, analyst consensus projected deliveries of roughly 461,000, according to Faqts. The average of other Wall Street projections, however, was closer to 455,000. Production plummeted as Tesla temporarily shut down factories and generally delayed output. It seems Tesla was trying to reduce soaring inventory, while some of that was due to improvements in Chinese manufacturing for the updated Model 3 and the planned Cybertruck. By mid-October, the multinational EV behemoth will hold its earnings call and release its complete third-quarter results. Interestingly, Tesla bulls were already anticipating the anticipated arrival of the Cybertruck and a robust queue for recovery. Looking past Q3 deliveries, we are now set to be entering the next stage of growth for Tesla globally, with the Model 3 refresh front and center in China and the Cybertruck production set to kick off beginning around Halloween. Wedbush analyst Dan Ives, a veteran Tesla bull, said on Friday. Emmanuel Rosner, an analyst at Deutsche Bank, recently presented a more negative outlook, lowering the company's price estimate for Tesla stock from $300 to $285. Rosner estimated that 440,000 Teslas would be delivered. Furthermore, Rosner believes that the 2024 consensus forecasts are at significant risk of decline because of the slow growth in volume. Deutsche Bank anticipates 2.1 million units delivered in 2024, which is less than the current estimate of 2.3 million units. Additionally, Rosner projects 2024 EPs of about $3.90, which would be less than 2022 profit levels. According to FactSet, Wall Street projects 2024 earnings of about $4.68 per share. One may now question why individual investors are flooding the market with Tesla stock. The 10-day moving average of retail flows into Tesla far outpaces retail flows into other EV stocks and AI stocks, indicating that retail traders have increased their bullish bets on the EV maker this year as the stock market is increasingly perceived as a bet on artificial intelligence in addition to being the leader in the EV space, according to Vanda Research. Per Vanda data, retail purchases of EV stocks other than Tesla make up about 6% of average daily. Tesla sales make up just 5 to 10% of average daily Tesla purchases compared to the fourth quarter of 2020 and the first quarter of 2021, when Tesla inflows peaked. More investment is being driven by more than just the prediction that Tesla will win the EV war. According to Vanda, the enthusiasm for artificial intelligence technology, which has driven large-cap tech stocks higher until 2023, is partially responsible for the 2023 increase in Tesla shares. In a statement released on Thursday, the research organization stated, from a retail perspective, this hardly looks like a resurgence of the EV theme. Therefore, we can state with confidence that, at least for the time being, retail investors view Tesla more as an AI proxy than an EV tail. The report also noted that institutional investors have increased their stakes in Tesla, indicating that there is still potential for demand for the company's shares to rise. Elon Musk, the CEO of Tesla, has long been outspoken about the risks associated with artificial intelligence, yet in the midst of the excitement around ChatGPT, he has been hinting for months that Tesla may use AI in its own operations. He subtly established X.AI, a new AI startup in Nevada, in April, and proposed that it launch TruthGPT, a rival to ChatGPT. Tesla is still facing economic challenges, despite its impressive 2023 performance, as the market as a whole is still being impacted by rising inflation and high interest rates. In an effort to fend off rivals, the business has frequently lowered the costs of its automobile models in the last year. But this has worried Wall Street analysts and investors because it is reducing its profit margins. In general, Tesla has been a favorite among admirers of Elon Musk, the company's frequently contentious CEO, and retail stock investors placing bets on the renewable energy transition. Tesla went public in June 2010 for $17 per share, with a market valuation of approximately $782 billion. 10 years later, the stock had gained almost 5,700%, trading at about $1,000. The largest block of shares, approximately 1.36 billion, or 43.6%, were held by retail investors as of March of this year, according to Wall Street Zen. Institutional investors owned 1.35 billion shares, or 42.84% of the total, which is a decrease from 43.01% the previous year. 442 million shares, or 14% of the company's stock, were owned by executives.